$1,000 may not seem like much in the grand scheme of things, but don't knock the power of the money you invest. Even $1,000 is a fantastic start in building toward long-term financial flexibility. In fact, the first $1,000 you invest can be the most important investment you'll ever make. Unfortunately, the sheer number of investment options in the market to choose from can be overwhelming and downright confusing in the beginning. But don't worry, in this video today, we'll break down how to invest your first $1,000 and discuss 7 possible investment options to get started. So let's begin. Number 1. Stash it in high-yield savings. As a kid, you might have stored spare change in a piggy bank and watched your savings pile up over time. The grown-up version of the piggy bank is the high-yield savings account. The average interest rate for a typical savings account is only 0.09%, which barely covers inflation. But a high-yield savings account can earn you a much higher interest, up to 20 times that same amount. That means if you deposit $1,000 in a 0.06 interest savings account, you'll accrue only 60 cents. But if you put that $1,000 in a high-yield savings account with an annual percentage yield of at least 10%, you'll earn $100. You can also withdraw your cash at any time if you need it. So it's a good idea to invest your money in a high-yield savings account. Number 2. Invest in 401k. You can double your money by investing in a company-sponsored retirement account, such as a 401k. That's right, if your 401k offers matching dollars, that $1,000 could very quickly turn into $2,000. Many companies offer a 401k to their employees, and a lot of them also offer company matching as an extra incentive. A 401k company match is money your employer contributes to your retirement account, usually based on your own contributions and capped at a certain percentage of your income. If your company offers a match, the business will double your contribution, usually up to a certain percentage of your gross salary. For example, if a company offers a 3% match, it will contribute $30 for every $1,000 of your paycheck. If your employer offers it, it's a quick and easy way to double your money, not to mention a great way to save some dough on taxes since your contribution usually enters your account before taxes. But don't stop at matching contribution. For 2021, most 401ks allow for $19,500 in total employee contributions and an additional $6,500 if you're older than 50. If you have $1,000 to invest, you can check with your HR department or benefits specialist about how to set the money aside for retirement. Number 3. Invest in an IRA. Up to 50% of Americans don't have an employer-provided retirement account. Even if you fall into that bucket, you're definitely not out of luck. You can consider setting up an individual retirement account, also known as IRA. There are 2 basic types of IRAs, traditional and Roth. A personal contribution to a traditional IRA is often tax-deductible and earnings grow tax-deferred until withdrawn. A Roth IRA is an after-tax contribution, so it gets no deduction. However, contributions can be withdrawn penalty-free, earnings grow tax-free, and those earnings can be withdrawn once you turn 59 and a half. So if you have $1,000, starting an IRA at an online brokerage is a great way to begin working toward long-term wealth generation. For 2021, investors can deposit up to $6,000 into an IRA and up to an additional $1,000 if you're older than 50. Number 4. Invest in ETFs. If you have an IRA or brokerage account, it's time to start choosing where to invest. If you're just getting started, an exchange-traded fund or an ETF is an excellent place to begin. An ETF is a fund that can be traded on an exchange like a stock, meaning it can be bought and sold throughout the day. But unlike stocks, which represent just one company, ETFs represent a basket of stocks. An ETF works like this. The fund provider owns the underlying assets, designs a fund to track their performance, and then sells shares in that fund to investors. Shareholders own a portion of an ETF, but they don't own the underlying assets in the fund. These funds are easy to purchase, and on average they have lower fees than many other investment options like actively managed mutual funds, and they can accept even smaller deposits. These funds also have the advantage of being very diverse investments. With $1,000, you can pile together ETFs with different risk profiles. For example, you can split the money into $250 in a high-risk growth-oriented ETF, another $250 into a dividend ETF, and put the remaining $500 into a bond ETF. Or you can reverse the mix, or even put it all into the growth ETF. Well, it all depends on your time horizon and your risk tolerance. This diversification can help reduce your portfolio's exposure to risk. Number 5. Invest with a Robo advisor. If the idea of picking exchange-traded funds bores you or terrifies you, then you can consider having a robo-advisor. A robo-advisor might sound like something out of a science fiction novel, but it's pretty standard these days. Robo advisors are technology platforms that use science and advanced algorithms to make investment decisions on your behalf. It serves as a cost-effective alternative to a wealth manager. These AI-driven advisors ask a basic few questions to determine your investment goals and weigh the risks before putting your money in a low-cost investment portfolio. They continuously revise your portfolio according to their algorithms. With $1,000, you can invest directly with a robo-advisor like Wealthfront or Betterment, giving you a few ETFs and a ton of diverse exposure to the stock market. They buy fractional shares, which means you could own 10 or 12 ETFs with just $1,000. They'll also manage your portfolio as needed. Better still, many of them are geared towards small account balances with little to none minimum amount. Number 6. Invest in a single stock. Now, this investment option requires a higher risk tolerance and a lot more research, but it also offers high potential returns for your $1,000. This is for the type of person who relishes in yelling, "I'm all in," while playing poker. $1,000 is enough to make a single stock purchase through online brokerage. You do lose some money in the transaction itself, but the right stock can return many times the transaction costs. Of course, it can also end up with you losing money or making a smaller return than the ETF investments containing the same stock as part of the mix. That said, researching a stock and putting $1,000 into it can work as an effective investment option. For this, E-Trade can be one of the best options for buying individual stocks. It is one of the most advanced platforms for buying and selling stocks, as well as doing robust research on the stocks you want to buy. In addition, they've also started offering no commission on stocks, so you'll definitely save money when buying. Number 7. Invest in real estate. Acquisition of real estate ranks among the most common investing practices. But what can you practically invest in with only $1,000? Well, there is an investment product called REIT, which stands for Real Estate Investment Trust. It's similar to a mutual fund, except instead of stocks and bonds, the assets are income-producing real estate properties such as office buildings, apartment buildings, and single-family homes. Investors can invest in REITs and own and profit from real estate without the hassle of managing it. The easiest way to do this is through Fundrise. Fundrise is an online real estate company that gives investors access to private real estate deals. Here, with just $500, you can make an initial investment. You can use their starter portfolio, which puts your money into several different REITs and gives you instant diversification. So if you're looking for a quick and easy way to invest in real estate without having to manage buildings, Fundrise can be your go-to option. Now, the fact that you made it to the end in this video tells you that you're serious about making a smart investment. With some time and planning, your $1,000 can be primed for growth sooner or later. While it may not seem like a fortune, your small investment can help lay the foundation for a long and profitable journey toward financial flexibility. We really hope this video helps you make a smart investment decision. Thank you so much for watching. Let us know in the comments below how you are planning to invest your first $1,000. Please leave a thumbs up and share the video if you found it to be useful. For more videos about investments and personal finance, subscribe to our channel and hit the notification bell to never miss an upload. See you guys in the next one.